Hello and welcome back to How to Invest for Yourself. Today we're going to talk about whole life versus an IUL and the reason why I'm doing it and what my experiences were just getting started. As you can see on the screen, I've barely just made my first payment or two payments in both policies. So I chose to do both a whole life policy and a MPI IUL. So they're both pretty much similar in setting up, but I definitely see a night and day difference between the two policies. So with the whole life, for example, I started the whole process on September 19th, and it took me weeks to get this stuff set up. And there was multiple back and forth. They were sending me from a welcome person. It would be a call and a meeting with a welcome person. They would introduce themselves and set me up with their corporate login account, things like that. And then they would send me to another person that would set me up with what my expectations were, and then another person to set me up with filling out the paperwork to get my policy started, and then another person to do a track per se to building wealth and things like that, to do the IBC kind of thing. So I went from, I don't know, I lost count after a while. I think there's about 5 different people that I had to talk to, and I don't remember any of their names, to be honest with you, because there isn't a personal connection with any one of them, because it's very cut and dry and very it's informative. I'll give them that. They're friendly, but it's just too many people. Like there's just too many faces to deal with. And so there's no personal connection with any one person. It's all over the place. So that being said, when I started the whole life and I started the IUL, I did them both in the same week. About 4 or 5 days difference between the two. Okay, so with whole life, I signed up for them and they go, hey, we're going to provide a service with you. We're going to make sure that you're max funding, and we're going to help you grow your IBC, quote unquote, whole life policy. And we're going to structure your policy in such a way that you can maximize the cash value, and that you can get cash value out immediately as soon as you open up a policy with us. And we're going to help hold you to accountability. We're going to help you pay off your debts, help you grow your money, and do all these things for you and provide all these services for you. And they charged me $500 to do it. So I was like, well, okay, I guess this is the only route I can go. So I just went that route and paid the $500. So a couple days later, I had already been listening online to a lot of YouTube channels about MPI IUL. And why am I only picking these two? Well, you have to keep in consideration that IBC, the whole infinite banking concept, my perception in the beginning was there was no other way to do IBC unless you had a whole life policy. But after watching multiple videos, I'm like, well, you could do the infinite banking concept with an MPI UIL, right? And so then I started researching IULs, all the different types of IULs out there, and then I started researching specifically the MPI, which is, they call it a SCIA, which is a secure compound interest account. So it basically does the same thing, but there are very obvious differences between the two, and I'll go over both of them. Okay, so starting with the beginning, I signed up with both companies. The whole life insurance group, I would say they're a group because a whole bunch of people, they charged me $500 to get started. And then with MPI, it was one person and only one person that I dealt with the entire time, from the conversation at the beginning, filling out the application, getting approved, asking any kind of questions whatsoever. I had one person to go to, and I know their name. It's not like I have to guess. With the whole life policy, I have to guess who was it that I was dealing with. Was it this person, that person, this person? You kind of get what I'm saying? They were just sending me all over the place. Okay, so day one, I started on 9/19. I paid my $500 to the whole life. A couple days later, I signed up for the MPI IUL, so they're around the same time frame. I told them that I wanted to invest around $500, right? So you can see that's how, not so much as the wording I'm using is incorrect. It's not an investment. I wanted to deposit $500 into each account, right? Over time, every single month, deposit 500 in one account and 500 in the other account, so that way it was like an even comparison between the two. Okay, so they went through, both of them asked me the questions. They got the initial contracts started, or sent to the application, sent to underwriting, and with the whole life insurance policy, if I recall correctly, the first question they asked me was, "Oh, we noticed." The underwriter came back and asked the agent, "Hey, you need to find out from the customer, why do they? We noticed that he already has a whole life insurance policy. Does he have the whole life insurance policy now? And if he doesn't, what was the results? We need more information." So the question was sent back to me from the whole life agent, and I answered those questions. I was like, well, I want to do both. I don't currently have a whole life insurance policy at all, so I'm trying to sign up for 2 whole life insurance policies right now. And so with the whole life insurance policy, they took that answer. A couple days later, they go, "Oh, we noticed that you have these meds on record. One was for seasickness or some kind of, like, I don't remember what they said exactly, but they were like, why are you taking this med, and why are you taking omeprazole?" And so I wrote back. I said, this first med for dizziness or seasickness was because I went on a cruise and I needed something, because I didn't know how I was going to react to the ocean and the waves. I just took that for that purpose. I don't need it on a constant basis. And then the other one, I do have acid reflux, so I take that pill, but I really don't take the pill like religiously every single day. I just take it whenever I have heartburn, so like an acid flex kind of thing. And that was pretty much it, and then it went quiet. Now with MPI, they didn't ask me any questions. They go, "Okay, we're going to schedule you to go in and do your physical. You can either have a traveling nurse come to your house, or you can go to them and they'll do a blood draw, they'll weigh you, they'll measure you, and then get that to our underwriters for finalization." I was like, wow, that was really easy, really quick. So far, I'm noticing night and day between the whole life insurance and the MPI IUL. The whole life was asking me question after question. Then they came back and gave me a third question. They go, "Oh, we noticed that the customer was a smoker and had to go to like a rehab or something like that, and we want to know what was the contents that he was smoking, and why was he going to the hospital, and what was the results of that, and how long has he been smoking, and how long has he not been smoking?" And I replied back, I'm like, "I don't know what you're talking about. Where are you seeing these medical records?" Because now at this point I'm getting upset, because MPI is moving really quick, really smooth, no issues whatsoever, and a whole life is just like questioning, but then they come up with this crazy stuff that's way out in left field. So I'm like, okay, this doesn't make sense to me. So I'm starting to get upset, because the question is the way that the wording of the question was, I felt like I was being attacked. And at the same time, I'm like, they're accusing me, the way it was written, the way the question was written to me, I felt like they were accusing me of being a smoker and smoking something that was not allowed, right, not legal, and that I had gone to some kind of rehab, and that they're looking at all these medical records, and I'm in the back of my mind, I'm like, man, they're going to jack up my insurance rates, or they're going to cancel me before I can even get started. Something bad's going to happen. So I was writing out that, as I had explained to them, I'm like, I've been in the military my entire life, right? From the time I was born into the military thanks to my parents, right? My dad was in the Air Force. We moved around the whole time. He retired from the Air Force. And then when I graduated from high school, I went to college, and then immediately went to the Marine Corps after working a couple years after 9/11 had happened. So I went into the Marine Corps. So you still see all my medical records are all tied with the military. I get out of the Marine Corps, I go to college, and I'm on the VA. So I'm using VA benefits, and I'm going to the VA hospital. So again, those are still kind of like military records. And then I go, after that, after I graduated from college, then I went and started working for the Department of Defense. Again, working with military doctors, and all my medical records were all tied into military stuff. So I wrote back, I was like, I don't know what records you're looking at, but I haven't started using any civilian doctors until recently, when I started started working for the civilian company since 2012. So from 2012 to current, there would be about 11 years worth of medical history that you could see in your system. Otherwise, you're going to have to go back and pull medical records from archives from the military. You're going to have to go back and pull those out. And so they took that information, and I didn't hear anything else back from them. And I think it was weeks, like tons of time, like a whole month had gone by, and I haven't heard nothing from these guys. I was like, I don't know what's going on. Am I approved, not approved? What's going on? That's whole life. So it's very, whole life to me that's my experience. It's just my experience. Yours might be different. But for me, it was very frustrating because they weren't even looking at the right person. I go, hey, are you making sure that you're looking at the correct, first, middle, and last name person? Are you looking at my social security number completely? Are you looking at my age to make sure my age matches with the medical records you're looking up? Because I was getting frustrated because I was like, okay, I'm almost done. I'm almost done over here with IUL MPI, this MPI policy. And you guys ain't even give me no notice, no nothing. I was going to cancel. I was like, give me my $500 back because I was getting frustrated, right? So they go, oh, we want to know. Oh, we just got it approved. You're good to go. We're going to start we're going to send you over the final illustrations and stuff like that, and get you signed on. I can't speak right now, but you get what I'm saying. And with the MPI, they go, okay, here's your IUL, and here's the illustration. We believe this one's the best fit for what you're trying to accomplish, and it's $500 a month, $6,000 a year, and then you sign the paperwork, and then the agent signs the paperwork, and your policy starts. And then the first payment is due, and so as you can see on the deposits, I did a deposit of $500 on October 27th. That's when my policy went into effect, was on this date. Look at this one here. The date, look at the date difference between the 27th and the 9th. Like, that's almost 2 weeks. It's definitely 2 weeks of difference between these two policies. And this one, the MPI IUL, could have been faster, but the nurse that I was scheduled to go see to do the blood draw, the measurements, and all that stuff, she got sick. So she sent me a message, and she had to push it out. I was supposed to go on like a Tuesday. So I pushed it out to a Thursday, and then I got sick. I was like, oh, well, I can't go do blood draws or nothing like that because I'm not feeling good. And so I rescheduled it for the following Tuesday. And so I went and did that. So it could have been faster. Like, I could have definitely been done because from the time that they did the blood draw on Tuesday, they had my results by Friday. Everything was ready to go for me to view by Friday. I had everything sent to the underwriters for my IUL. So it could have been even faster. So far, the MPI IUL process of just getting started with the policies is a lot cheaper, a lot easier, and a lot less headache. With this whole life one, for me personally, and everyone's going to be different, I'm just saying, for me personally, the whole life one was a pain in the butt, and it cost me $500. I was about to cancel them completely and be like, you know what, it ain't worth it. This is not worth it. I'm just going to go with an MPI IUL because it was super easy. They didn't ask me any extra questions outside of the ordinary, and I just did my physical examination, and they did everything they're supposed to do, and I got everything good to go, and I got the results. It was in my email, and I also had a text message from them, and the guy that I dealt with was straightforward. He was straight to the point. He answered my calls. He responded to my text messages like with a reasonable time, and I got every question I needed answered like super quick. And granted, the whole life people could have done the same thing, but me sending a message would be like no response for days. And I'm sending the message to the whole life agent who's supposed to be talking to underwriter, and I wouldn't get a response back in some cases. Sometimes he would respond in the same day and say, oh, I'll look into it and get back to you, or he wouldn't respond at all. So I was getting very frustrated with the whole life policy stuff. So now we're past all that, right? Both of them say, hey, you're activated. And so this guy, they pull the money out on the 9th. So that's what they send you, the contract, basic year policy. And in there, you sign up and say what your bank account information is and what day of the month that you want the withdrawals to come out of the account. Like, when do you want to start making the payments, and when do you want the payments to come out consistently? So I told this one to be the 9th, and this one I set it up to be the 17th. Now, the cons, I've already said everything about the whole life for being cons. The con for the stuff that you need to be aware of, right? These are things that you need to be aware of. With an MPI IUL, they take that money out immediately to start the policy. So my first payment to start the policy was $500. Now, if I set the date to be the 29th, they would have took the payment out to start the policy, and they would have took out another $500 on the 29th. So you have to be conscious of that information. And yes, the agent told me, letting you know right now, whenever they take the money out, make sure that you set your date before the date that you initially start the contract. Otherwise, they're going to take two payments out close to each other, and you don't want to mess yourself up. So that's what I did. I set mine to the 17th, which is way earlier than the 27th. So that way, only October 27th came out, and then the date that I want from now on will be like November 17th and December 17th, right? So it's going to be $500. Okay, so let's just look at what I've done so far. So I didn't get any emails or responses except to say, congratulations, your policy has been started with the whole life people, right? I only got a letter saying, welcome aboard, basically. I got no response from anyone else to say, this is how you log into your account, this is the company that you log into, nothing. I got nothing from nobody, and it was really frustrating. That's what I'm saying. This company that I dealt with for the whole life policy was very frustrating. And yes, you could ask questions, but at the same time, if you don't know what questions to ask, you won't know what questions to ask. So you don't know what you don't know. How are you supposed to ask questions? You know, you've never done this before. It's your first time. Now, if you're a seasoned person and you've watched, videos on people on how they set up their policies, and this is from the point of view of someone who is, I don't sell it. I don't sell the insurance. I don't sell it, right? I've never had a whole life insurance policy. Well, I'll take that back. I did have a whole life insurance policy, but it was my grandfather who put it on me when I was an infant and then never paid anything else into it. So it only had like $100 cash value. So it was really nothing. But besides that, I've never owned a whole life insurance policy in the manner in which I'm about to now pursue. So to me, the whole life insurance policy side was doing this IBC thing, because this is a specific company. This is a specific company that sets up these IBCs, and they do all of this stuff, right? And they call it a sacred account, right? So this is called a sacred account, and this one's called, on the MPI side, is called a secure compound interest account. And I forgot what MPI stands for. I'll find out what it is, and I'll put it in the description below. But I have been watching videos on both MPI, IULs, and IBC, and then also watching other videos on, I call them hype men. So for this side, I think it's Chris Noggle mostly that I watched here on IBC, and I don't like being sold. So I felt like this was very in your face, super commercialized. You got to do this, otherwise you're an idiot kind of thing. That's how I felt whenever I was watching the videos, and I expressed that to the person I talked to in here. I see the value, but I really don't appreciate the way that Chris Noggle talks to people and tells them basically you're a moron if you don't do a whole life policy and make your own bank. I get it, but it's just it come across as very brass, right? Very in your face, and it wasn't so inviting to me. It wasn't something that I was like, oh, this is really cool that I should do this, until I did my own research and started watching other people's videos, and then I'm like, oh, okay, so this is what it is and this is how it works. So just know that. And then with MPI, I came across Donnell and his wife and their YouTube channel and started watching them, and the only reason why I fell across their pages is because of the velocity banking stuff. So I've been doing velocity banking not very long, so it's very new to me too. I started, I think, in August. So I started watching videos from Christy, and I watched Christy present this stuff. I was up late one night, and that's how I got hooked on to velocity banking. I was like, I need to find a way to pay off my debts because my Best Buy credit card is going to be charging me 30-something% interest, even though it's 0% currently. But at the end of my deferral time, they're going to tack on all this interest that's been building up for the last 18 months. They're going to start slamming it onto my credit card with them, and I'm going to end up owing a lot more. I was like, I got to find a way to pay this off. So I started running numbers, doing it the way Dave Ramsey teaches you, is take all your extra cash and throw it at something. And I was like, man, I'm not going to be able to make it on time because I owed $7,000. So when I was up late one night, I was, laying in bed watching TV, watching YouTube, and then that came up. I was like, oh, this sounds very interesting. And I'm listening to Christy, and she's giving these examples, and I'm like, man, how does that work? That doesn't make sense. And so I'm looking at it. I'm watching another video and watching another video. I'm like, man, I didn't know you could do that. And I was like, wow, this velocity banking thing is really cool. I wonder if I can use this, for myself. So that's what kind of brought me to this next point. Is I clicked on another video, and it was Donnell talking about velocity banking and how to pay off your debt and how your paycheck goes into the bank, and usually your payments just go out and you never see the money ever again. It just goes to your bank account, and it goes to pay all these bills and pay your credit card, pay your car payment, pay your student loans, and it just disappears. But you're not seeing anything else out of that money. And so I clicked on another one of his videos, and he started talking about the secure compound interest. Why wouldn't you want your money to securely and compound while you're also paying off debt? So you're getting two functions out of the same dollar. One that's building value on the side, and then you borrow from the cash value to then use that money to pay off your debts. Once all your debts are gone, then you can use the cash value of either policy, doesn't matter which one you do, whole life or MPI. You take the cash value out and then invest it. So the whole point of having your own banking system, your IBC, is to use it as an investment to where the money you put in stays in your account, and you pull a loan against your value of your account, and then you can use that to invest or to pay off bills to get out of debt, but not to go out and buy luxury boats or cars or planes or whatever it is you're trying to do that depreciate in value, go on a vacation, right? Now with IBC, on the other hand, they're telling you, hey, you should use your IBC to do everything that you want to do, to buy that car, to buy that house, to buy that boat, to invest in real estate, to invest in the stock, to do all this stuff. So that's where I fell into the IBC side. Was, well, okay, I'm wanting to pay off all my debts, and I wouldn't mind borrowing from myself and then paying myself back with interest, and then having the flexibility of the loan tied to the contract that, hey, let's say the car, I go and buy a car, and the car payment would be $450 a month. Instead of paying the bank $450 a month, I pay myself $450 a month and pay back that loan I borrowed. But let's say I have a month that I lose my job, or I don't get paid enough, or something happens, and I'm like, man, I'm short I don't have $450 this month. Let me just pay 250 or $200 this month, and then I'll just catch it up next month. I don't have to call anyone. I don't have to call the bank. I don't have to do anything. I just make the payment to the loan, or I don't make a payment to the loan. All it does is, at the end of the day, if I never make the payment back to the loan, which they all say, and I also recommend, you should pay back your loans, just so that you have that cash available to you in the future, the cash value to borrow from. If something pops up, maybe you want to invest in something, or maybe you get sick, or something happens and you need cash, you can pull cash from the cash value in the form of a loan. But you also are going to get charged annual interest on that loan, so you kind of want to pay it back. You see what I'm saying? And I think they compound. No matter which way you go, you can do both. Both of these can do the IBC concept, right? The infinite banking concept is just that. It's just a concept. Just like with doing the velocity banking, no one tells you have to use a HELOC. You have to use a credit card. You can't use a business line of credit. You can't use a personal line of credit. You see what I'm saying? There's no set in stone path. But velocity banking is just a concept, just like IBC is a concept. MPI is a concept on top of an IUL. The IBC mindset, the infinite banking concept, is on top of a whole life insurance policy. Both policies are not just plain Jane policies. Both of them are structured specifically for this purpose, right? The MPI IUL is specifically created in such of a manner that you can grow your money and have retirement income that's tax-free. That's the whole point of an MPI policy. It isn't necessarily built to do as they advertise for IBC, in the sense of, hey, as soon as you put money in the account, you can get money out of the account that very day. Once the cash value shows, then you can take a loan against the policy. That's not the case with an MPI, and people need to understand that. I didn't understand that. I thought, hey, money goes in, I can pull a loan policy out, pay some bills, and then the next month I pay it back, and then make my payment, make my deposit. So I make my deposit, and then I pay back the loan at the same time, and then do it again, wash, rinse, and repeat, while the account is also growing every single month. As you can see here with the deposit, the first deposit was $500, and they showed the account value as this. So there was fees or expenses of $52.63. There's a big difference in expenses between this guy and this guy. Now look at this. They didn't do the $500 a month like I asked them to. They did the $430 because I'm 43 years old times 10. They just did that. That's my monthly payment into my whole life and policy. But if you look at this, look at the expenses here. They gave me a cash value on my account of $242.52. Then they took out $187.84, and I pulled a loan because I wanted to see how fast could I pull cash out of the account. So you had a form process, and all this I found out on my own. No one told me from the company that I paid the $500 to, how do I do this stuff? How do I figure this out? You know how I got into my account, how I figured this out? I got a letter in the mail. I got a letter in the mail from the whole life insurance company, and they had my policy number and a welcome, and they didn't say anything about how to log into the account. So I Googled it. I logged online, I Googled it, and I found my insurance company, and then I put in my information, the policy number and everything like that, and requested a password. And then I basically set up my account, right? Because it'll say new member or something like that. I click new member, and it asked me what my policy number is, my date of birth, my social security number, and then my email address or something like that, so they could verify who I am. They sent me the information. I logged in. That's how I figured it out. And I figured out how to do the loans on my own. The company I paid $500 to didn't do any of that for me. None of that for me. And they told me, yeah, we're going to show you. We're going to show you how to set up your account. We're going to show you how to take out your first loan. Blah, 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 blah. They never did any of it. They didn't do any of it. I did it on my own. So I'm just warning you right now, don't fall for this stuff, right? Don't fall for all the hype. Try to find a company that's not going to charge you $500 up front, because to me, it's not worth it. There's plenty of YouTube videos and plenty of people out there that are more than willing enough to do this stuff for free and show you how to set up your account and show you how to do infinite banking. You don't have to sign up or pay anything at all to get to do this. It's just a concept. Just like velocity banking is just a concept. You don't have to pay anyone to do velocity banking. All you have to do is invest in the time it takes to understand the concept. You don't need to understand it 100%, but at least get up to like 90% that you feel confident enough to take that leap and do velocity banking. So with this, right, and we go back to where I left off, I figured out how to do a loan. I issued a request on November 17th. 7 days later, $230.07 showed up in my account. Notice that the cash value in the account is $242.52. This is not 100% of my cash value. So I guess they let me borrow like 90%, basically. 90% of my account I was able to borrow from my cash value. And I'm not sure what the interest rate is, because they don't tell you. They don't tell you what your interest rate is. But I looked it up inside the contract, and right now, actually this one I don't know. I can't tell you what this one is. But with this one, I could see it in the contract. Oh, that's another thing. I got two different quotes. I got two different illustrations. One was a select, and one was a preferred. There was a select and a preferred. And I was like, what's the difference? And why do I have two different policies here? And I went through the numbers, finally got a hold of the agent. He sat down, he goes, this is this and this is that. And I ran through the numbers, and okay, well, I'm gonna pick the one that I get maximum cash value because I'm trying to do the IBC. So you have to pay attention to that stuff too. They kind of go through the illustration, but they go through the illustration so fast, and they talk to you as though you already know what the illustration means, because it comes in a huge packet, and it's like over 35 pages, each one of these illustrations. So I had two of these 35 pagers, and they don't tell you until you get to the end that, oh, this is what you could be making, showing the guaranteed side, then they show you an alternate side, and then they show you the second alternate, like the two alternate type categories. And none of this is going to make sense to you unless you've seen an illustration before. But I was totally lost. I was reading the whole thing. I was like, I don't understand. Why do they send all this stuff to you whenever you need to get to the meat of what it is that you're putting your money into? And I got all the way to the end, and that's where I found out. So, and this didn't help me. Now, what I'm telling you right now is I figured this out because of me talking to Donnell. So when I talked to Donnell about the policy, he goes, okay, all this pre stuff, the first 30 pages or so, those are just definitions showing you illustrations of past performance and things like that on the policy, and all the definitions and all the rules, how to take loans. Not so much how to take loans, but if you were to take a loan, if you're going to do a standard loan or an index loan or something like that. So they were breaking down all the information of the contract. It was an illustration of the contract. And then once you get to the meat of the deal, like how much you're contributing, how much is going into your policy, how much is the cash value that you got to have in the account before you can even take a loan. So there's these surrender charges you have to take into consideration. So these are the benefits of MPI, right? So MPI, first of all, it was easy, right? Easy to set up. That was the first thing. With IBC, it was a pain in the butt. All right, it was a pain in my butt. There was so many questions, and there's too many people involved, too many questions. And what I mean by too many questions, there's no such thing as too many questions. But if I'm dealing with one person and then you switch me to another person and you switch me to another person, I'm like, man, who am I supposed to deal with for what? I don't care about titles. I need a point person, one person, and that one person only. Like this one, this one had one person. The whole time I dealt with one person and one person only, and I got all my information. I was able to talk to this person 24/7 pretty much. I mean, you can ask Donnell. I've sent him messages. To me, it'd be like midnight here, and he'll respond and say, "I'll get to you. Here's the answer," and I would get the response. So Donnell was on it. Like, I think there was only 1 or 2 times that I didn't get a response from, but for the most part, he didn't have to answer my questions. Whenever I'm up in the morning and I just wake up in the middle of the night and something random just comes to my head, I'm like, wait, what about this? What about this? And I send it to him. He responds. He goes, hey, I'll look into this. I'll get the answer for you. I'll let you know. And he would do it. With these people, it was not one person, and they weren't 24/7. So they weren't always available. So let's see. The whole insurance process, like I said, just doing it through the whole life insurance company was a pain in the butt. The loss of $500. To me, it's a loss. I see no value, zero value in paying $500 for 2 little paperback books that talk about the same thing you already know. Because you wouldn't be signing up for a whole life insurance policy, or you wouldn't be signing up for an MPI IUL unless you didn't already know, hey, I'm going to use this as a quote unquote, and I'm doing air quotes you can't see, a quote unquote retirement vehicle. Something that I can set up a legacy account with, or some place that I can get cash value loans against to not pay taxes, a tax haven basically. Something that's better than yes, you can get a Roth, but do you have a death benefit tied to it? No, you don't. And then you're forced to pull money out at a certain age. So like a regular IRA, I think you're forced to pull it out at a certain age because the government wants their money. Same thing with a 401k. You're delaying the inevitable just to build your account. But what happens if the stock market drops? On either account, it could be a Roth IRA, regular IRA, or your 401k, because those are typically what most people have, right? I've seen my account, my 401k account just drops like crazy. I'm like, man, I'm losing all this money. I want to take out a loan so I can, take out a 401k loan so I can buy a house or buy some property or something. I can't because my values dropped so low. Now I can't take the money I want. But then the other side is with a 401k, depending on your employer, they'll tell you, hey, you can only take one loan at a time. Sorry, buddy. Oh, and by the way, we're going to dock your pay after tax to pay back the loan. You're not going to be able to pay off the loan in chunks, right? You can't do velocity banking to pay off the loan in chunks. You have to either A, pay it every single month for whatever the term is that you set up, or pay it 100% all at one time. I was like, man, this sucks. So I was looking at other alternatives. I'm like, well, with a whole life insurance policy, the account will grow over time as I put money in. As you can see, this is what has happened, and this is what today's value is on my account. So I made the payment on the 27th to start it, and then the 17th just passed a little recently. And now you can see my account value is almost $1,000 right now. It's not that much of a difference. This would be $1,000 total that I have put into the account, right? But I'm already at $925. They only charged me in expenses $22.18. That's not bad. That's not bad at all. That's way better than this. Both of these combined, 2 payments, is still less than the expenses on this first payment. Now, granted, these should be going down over time, and I think they both will, to a point to where you're just paying the base, and then the rest of the money is going straight into the account value, right? I would think that's how that would work. But the frustration part that I didn't really fully understand was with this policy, right? The MPI IUL was I can't take loans. So there's the cons. So the con with this guy is that your account value, so I'm going to put it in here. Account value must meet the surrender value. or surrender, they call it surrender charges. Must meet that before you can take a loan. So for my account, my surrender charges is like $3,004. And I don't know what it is for everybody. That it could vary, but I have to, in order for me to be able to do it, I'm going to put it on this column. I'll say surrender. For the first year, my account has to be here, right? It's got to be at 3,004, and then above that, I should be able to take a loan against. But then the question is, say my account value gets to $5,000. Right? So you subtract the difference, that should leave you around, $1,996. How much of that $1,996 am I allowed to borrow against my policy? Right? I don't know that yet. So I'll find out. And the other part that I wanted to find out too is, or what I found out was, I can't just arbitrarily just make additional payments to the account, because this isn't a thing that you make payments, quote unquote payments. It's actually deposits, and it's a written contract that you can't just go ahead and throw in, hey, I got $1,000, or I want to go ahead and throw in the $3,004 right now. I can't just do that, so I have to make a request. So I'm going to be asking Donnell, say, hey, I want to go ahead and get my account to this 3,004 in the value, so that way the next time I pay, I'm actually growing the account to where I can start taking out loans. Right now I can't take any loans at all, because I don't have, here's my value, I haven't met the 3,004. Now look at this one. If you look at whole life, there isn't a surrender value that I have to meet. There isn't one. I have the account value. Here's my account value, and I was able to take this loan immediately. I made the request, and immediately is relative, right? So this is 7 days. 7 days immediate is, okay, 5 business days, basically. 5 business days for me to get the money out of the account. And I did this on purpose, because if I'm going to use this IBC method with this whole life policy, I need to know exactly how long it takes from the time I make a request to how long it takes me to get the money. Because if I'm going to use it in my Velocity Banking, I need to know when the money hits my account, so that I can pay my debt tool, my credit card, or my HELOC, or my personal loan, whatever it is your debt tool is, so that I can use that card to pay all my other bills, right? I may need my credit card to make my gas for my car, or to pay a water bill or something like that, and I need that money to be in the account. So not only do I have my paycheck, but I also need this money to help me pay my bills faster, because my goal at the end of the day is to put 100% of my money, all of it, into the policy, into both policies, right? Whichever one is going to be the winner after, say, a year or so, I'm going to know. We'll say, we'll give it more time. We'll be more generous. So if you know anything about Donnell and his WTF moment and his lessons that he's teaching you, you're going to need to at least have enough money in this account for at least 24 months, right? On that 25th month, the MPI part, which is just a strategy, is going to kick in. So it's based on so these are this is not the dates here, right? So I'm just talking about the year. So this is the months, right? So this is month 25 or 24. So that's the end of the second year. And then this one is where the MPI starts kicking in. So let's say at the end of this year, you have put in your $6,000, which is $500 a month. And on year 12, you had $6,000. And on not year 12. Let me back up for a second. On month 24, you have already contributed your $6,000 for that year, but your total value in your account should be $12,000. MPI will then add $6,000 to your account, right? That's how they will give you more money, more cash value in your account to help you grow faster based on the interest of whatever that year end is. And I'll explain all that stuff. It's super complicated. If you don't know what it is and you've never seen it before, it can be very confusing. So for month 25, you will get the $6,000 in your account, assuming that you don't have any loans out, right, for that time. At least that's my understanding. So if your cash value is $12,000 minus any loans, that could reduce this amount of money. At least that's my thought. I don't think that's the case, but maybe that is, and I'm gonna find out. So I'm gonna find out, but I have to wait, obviously 24, 25 months. With this over here, it doesn't do that. There are some things that I've noticed with the policy, though, that they have this, and I'll put air quotes, they have this thing that's called a bonus up to 10% or 10 times bonus. I'm not sure what that is, but the interest looks like it's 2%. So I'm earning 2% on this cash value that's in the account every single month, I think. I'm not sure. I don't know. I'm still learning. Like I said, I'm not sure how the interest is earned on here. But I do understand more about the MPI than the whole life at this point. So and the only reason why I'm saying this is because I've spent a lot of time. I've been asking these questions. I've been researching this stuff. I've been watching videos. I've been reading. I've been doing lots of research. So with MPI and IUL, and at the end of the day, this is what I think. To just be 100% transparent, I feel like with all of the pain that I had to go through for this whole life policy, it's not worth it for me. It's not worth it for me. But I want to see at the end of the day, say after 1 year, and this one after 1 year, which one has the best value. So far, IBC is only a concept, but this whole life is not worth it. It's not worth it for me because of the pain in the butt it is just to set it up. Now, that's not to say later on that this guy is going to be any easier, because you're supposed to go for, I guess they call it a relock on the 25th month, or that at the end of your 24th month, you're going to go and talk to Donnell or whoever your agent is and do a relock or make an adjustment on your policy to say, hey, I was comfortable with paying $500 a month. I want to go to $6,000, $6,000 a month. Something, whatever it is whatever adjustment you want to do. Because I'm looking to put 100% of my paycheck into either one of these policies or both. If they're both doing good and they serve their own purposes, because this would be like comparing apples and oranges. They're both similar. They're both round. They're both fruit. One is yellow or orange. Yellow would be a lemon, right? So one is orange, and one could be red, it could be green, it could be whatever the flavor is of the apple, right? We'll just say that they're the red apples, and we have an orange here. There's many types of oranges. So IULs come in many different types, just like whole lives come in many types. There are different types of apples out there. Okay, so we're just going to compare a red apple, in this case is IBC built policy for infinite banking concept, and this navel orange is built for an MPI IUL. Okay, so there's major differences between the two, but they're both fruit at the end of the day. You consume both fruit at the end of the day. They both grow on trees, right? One grows up north where it's colder, and one grows down south where it's warmer. Okay, so there's different purposes for each. Okay, with these policies, they both serve their purpose. With a whole life insurance policy, it gives you cash in your hand now. As soon as you put the money in, you can take the money out. With MPI IUL, if you can wait long enough, I would say probably close to 6 months. By 6 months, 6 or 7 months, I should have met the surrender amount of money, and then I'll be able to actually take loans against the policy and do what I was planning to do, which was use my policy to grow wealth on the side while taking the cash value loans out, paying them back every single month, but using that cash value so that I could pay off debt and do that over and over and over again until all my debt is gone. Okay, so I just want to show you, I wrote this up just to kind of do like a little comparison to see how long would it take and what would it look like if I was to take out loans and start doing like the infinite banking concept with velocity banking together. So here's this, and this is my strat. So this is my strategy based on the MPI IUL strat as well. Okay, so with the MPI IUL on month 25, they give you $2,000. So ignore this one right here. There's supposed to be a space, but there's $6,000 they're gonna throw in on the account because I'm paying $500 every single month. Right here's the monthly premium that I'm paying into it. That's $6,000 right there. You can see it over here in this lower hand corner. It says $6,000 paid in. So on month 25, they're going to put $6,000 to match what I put in on my year one, right? And then down here, they're going to do it again on the next month. They're going to match. They're going to put another $6,000 based on month 13 through month 24. So 13 through 24 is what? $6,000. So they're going to match another $6,000. So on this month, month 37 of my policy, they're going to put in another $6,000. So it'll double. So we'll go over all that stuff later, or you can just look at Donnell's videos, or you can ask him directly. He will answer your questions. You just set up a conference call with him. He'll spend 30 minutes with you and write out any question. You'll be like, hey, I saw Jason talking about this. What is this? What is this? What is this $6,000? What is the MPI? What is this secure compound interest account that Jason's talking about? Right? You can look at that. All right. So I wrote in here what my TAMRA is. So my TAMRA 7-day. You're gonna need to know this thing. This is like a government law on here saying, hey, you cannot exceed $7,781.79. In my case, this is my policy. This is how my policy is set up to say, hey, I'm not allowed to contribute more than $7,881.79 to my account. Otherwise, I will face tax consequences. Right? So that is, I put that in there to say, hey, I cannot contribute more than this amount because I will mech my policy. And that's a bad thing. You do not want to do that. So I wrote it out in here to say, hey, by month 7, I will start my strategy. So my strategy is to go and start compounding my account way faster than the MPI will kick in. MPI kicks in on month 25. My policy is going to kick in. The way I'm going to do my strategy is going to kick in on month 7. On month 7, I should have enough money right here to meet my requirement, my the numbers I was telling you, right? The surrender charges. So once I've met my surrender charges right here, it should give me this much money left over, right? So my surrender charges have been met. I'm going to only borrow a little bit. I'm assuming like 90%, so I'm going to say $60. I'll take $60. I'm just going to go right and roll it right back into my policy. So I'm not going to take the cash out and spend it. I'm going to put it right back into the policy. So I'm going to take the $60. The loan will come back to me, and then I'm going to write a check immediately. Write a check, put that $60 back into my policy, and then the next day that I get paid, or the next time that there's a premium payment, I will make my premium payment, which is going to be $500, and then I'm going to pay off the $60. So then the day after that, those balances go in. So say on the 18th. On the 18th, I put the $60 into the account way ahead of time, and I put the $500 on the 17th, right? April 17th, I put the money in. I take the loan, and I put the money back in. So we'll do the next month. So here they're gonna take $500 from my account. It's going to increase my balance on the account plus the $60 I put in there. Now I'll have $575.07. Here is where I'll start borrowing money to start paying my debts. So I didn't have enough money here. It didn't make sense to me like to take the $60 and go pay debts with it, because $60 to me yes, it's money. That's gas money at least, but I would rather grow my account. So I went in here. I say, hey, I want to contribute from this amount of money, this $575 that should be available to me. I'm going to take $450, pay some bills with it. Not go out to eat, not go buy something, not do anything crazy. I'm going to borrow basically $550. 100 of it is going to go right back into the account for the next month. And then I'm going to take the $450 and use that money to pay whatever bills, right? So I'm looking at month 8 to start using this as my velocity banking additional tool, while my account is still growing in value and earning interest, right? The interest does not kick in until month 13. And I'll explain all that, because you can see here's interest is 0, and I'm just estimating at 4. This is just an estimate. I have no idea what it is, what it's going to be until I get there. But I was looking up the history on their website, and the insurance company does show a history of stuff. But again, past results don't mean future, right? So I'm just going with 4, which is below their estimates, because their estimates is around 6.8, something like that. All right, so all I'm doing now is I'm going to go ahead and jump start my $6,000 way before they even put the $6,000 into my account. But I'm trying not to mech my account. So as I put in additional funds, I make sure that I keep track of how much money I have left until I reach my TAMR 7, right? So if I'm going to mech at $7,881, I need to make sure that I don't put in more than what I'm allowed to. Now, what I understand is I'm not allowed to make any changes whatsoever to my policy until my anniversary date. So I'm not allowed to increase my contributions. I'm not allowed to do anything whatsoever. So I had written this out, this estimate, assuming that, hey, I'm going to make adjustments to where I can now increase my MEC limit to 35,000 this year here. And then here, once I've increased it to say I want to have the flexibility to put in all of my paycheck into my account, then I could put in, set my full pay into the account. All right, so we're going to go over this Excel spreadsheet later on, and if you guys want to learn more about what my strategy is going to be, because this account is going to grow huge. And by my estimates, if I can do what I want to do, by the time I turn 51, right now I'm 43, right? So in a couple more days, like 4 days, I'll be 44. But by the time I turn 51, my account value will be $2.3 million. And you're like, well, how the heck do you get $2.3 million? My salary's pretty good. It's not that bad. So I'll show you over here. I'm not hiding anything from you guys. I just want to show you full transparency. All right. I'm a W-2 worker. This is how much I make on my paycheck after taxes. So bi-weekly it comes out to this. So how do I come up with a bi-weekly number? Sorry, not the bi-weekly. That's my frequency. But the total for my month is I take my C4, which is this C4, my paycheck, multiply that by 26, because there's 26 payments in a year, divide by 12, and that gives me my monthly number on average. My monthly number is this, right? And I collect disability. As I stated before, I'm a disabled vet. So I'm not super disabled. I do have some disabilities, but it's not enough to be 100% disabled. So I collect this in disability, and then I have other funds that come into me as well. So my total take home on average every month is around $7,269, right? That's not bad. It's not bad. It's not that great, but it's not that bad either. And then you look at my debts here, which I'll be paying these off because I want this to go to 0. I want my debts gone. Car payment, house payment, everything, student loans, all my credit cards, everything. I want it all gone, right? And I wrote all these questions out. Some of them are redundant, but I wrote all these questions out to kind of answer them as I go along, like to see if it's possible, stuff like that, and what I learned about when I could take out loans. He's saying about 45 days that I could take out loans. This is not true. So the ability of you to take out a loan is not 45 days. If you still owe, if you still have not met your surrender charge. Now, if you just said, hey, I have $6,000, I only need to make $6,000 payment once a year, then you pay your $6,000, okay, maybe now you can borrow it 45 days out. But for my case, I'm just doing the monthly payments. That's all I'm doing. I'm just doing the monthly payments. Sorry, the screen jumped there. Let me go back over here. My monthly payments are $500 a month, and I just stretched it out all the way. Nothing's added. Nothing has changed. Nothing is added in here, right? This is all that's coming out of my account monthly is $500 every single month. But the way my strategy goes is I am adding in more money up to my new Tamara 7 number. So here I'm changing every year on my anniversary. I'm going to change my Tamara 7. So for this month here, I should be able to put up to $35,000 just based on my policy, taking a loan and reinvesting into itself. And then once I get to this limit, I stop. I'm not putting any more money in for that year until I get to the anniversary date on the 24th month and say, hey, I want to raise it up to $333,000. I want my MEC limit to be pushed up to this amount. Now, if they give it to me, great. If they don't, I won't know, but I'll keep you guys posted whenever my anniversary date comes up, so you can see whether or not I was allowed to go to this 35,000 or even higher, this 333,000, or the next year, right? Every year I'm going to try to increase my number, but I'm still going to be putting in the same amount of money every single time. So you see here, my goal is to put in 100% of my paycheck into the account. So this isn't quite 100%. I kept a little bit of cash out on the side just in case something lapses or I forget, because it's a very manual process to withdraw money from the account. So you can't just log in and click a button and say, okay, give me the money. By what I saw so far, and that's another thing I got to mention too. The differences between whole life and the MPI IUL. This guy is super easy. It is very easy to pull a loan. All right, this one here, not easy at all. So you have to print paper. You have to print the loan request, and then you gotta. I think you have to fax it in, and then wait for approval. Then wait for I don't think there's so much of approval. You just have to wait for them to say, oh, okay, this is how much money you can pull. So that kind of approval, not so much like, what are you going to use the money for? Like if you try to pull a 401k loan and say, hey, I'm just going to go buy a car with it, they'll be like, no. They're going to say you need a hardship, or it's for emergency purposes only, or you're going to buy a house or some kind of medical expense or something like that. 401k is pretty strict, but with your own bank, and that's where that whole IBC thing comes from. You can pull any amount that they tell you up to your value. And I don't know what that means yet because I haven't pulled a loan here, so I don't know what that amount is, but I have pulled a loan on this side for the whole life policy. I can see they're letting me pull like 90% of my cash value. They're letting me pull that amount. And I'm sure that over time, as I keep making payments, the expenses will go down, hopefully to zero. Or where the policy will make enough money in interest. That's the loan. It's not talking about the policy interest. But if the policy interest makes enough, it can make the payment for my base, and I don't ever have to put any more money back into the base, at least. Then I can just focus on paying back my loans that I borrowed. And that's the plan anyway with these guys, is they want me to borrow the money and start paying off debt for the first year. So I'll have whatever the amount is I'm pulling every single month, and if I don't pay that off at the end of the year, I'm going to owe interest on that loan. And I'm trying not to owe any interest. I'm trying to keep it super simple, and this is already super complicated, and I agree it's very complicated, but for me it's worth it in the end because I see the potential on the other end, like I had showed you guys here. Wouldn't it be nice in 96 months, right? So you see, I'll be 44. So in 7 years, I'll have $2.3 million in my account. Sorry, right here, 2.3. This is the account value with the interest. And just interest alone every single month would be coming in at 56,767 and 82 cents. Dude, that's a lot of money. To me, that's a lot of money. And you can see the account is growing every single time. Assuming, and there's a lot of assumptions here, a huge amount of assumptions here, and I know this is not very realistic to me. I don't see this happening, but it would be super cool if it did. But guess what? I'm going to do for you guys. I'm going to do this. I'm going to do this, and I'm going to post it. I'm going to give you guys updates and say, hey, this is where I'm at. This is where I'm sitting today. This is what my account value is today. You know, and I'll just keep adding that information. See here, I already updated this. This is what my account balance is here. And I'm going to I'll put like a highlighter or just leave it white as I start putting money in. And you guys will see my accumulated value and what my cash value is. And it usually takes 24 hours. So this is the other thing I started noting. When they pull the cash out of my account, they pulled it on the 27th, but my account did not show the updated information for 24 hours. So that's interesting stuff I need to know, and you could also do the same. Is like you log into your bank account, you go, oh, I see that they pulled $500 from my premium deposit. How long does it take? Let me log into my account and see if it's posted. Oh, it's not there. Let me give it. And to me, it took 24 hours. I logged in, bam, it showed up. There's this amount, and then I could see the accumulated amount. So, and the interest does not earn on, you do not get paid the interest until a year later. So on month 13, I will get interest for this accumulated value, basically this accumulated value, and then whatever the interest is. So if it's 4%, let me double check my math here. So here it is right here. So my accumulated value is this. So I did this column here because it was assuming that I got interest from the month before, and then I just do the calculation at 4%, and there's my payment for that. There's my interest. So then when I go to this one, see, this is month 25, I think it is, because this is going to take into account the interest. So if I go into here, it's the accumulated amount plus the interest plus any additional amounts that I'm going to throw into the account, and that gives me my final balance for the end of that month. Okay, so the beginning of the month, it starts all over. Here's the beginning of the month. Then my accumulated value goes up. Then I got my interest payment here that's paid to me, and then any extra money that I got goes into here. Okay, so this number is just adding in the accumulated. It's just keeping track of the accumulated value, assuming that this. So I did this based off of the first payment, the first deposit. So understand that when I say payment, I mean deposit, because this isn't a loan. This isn't a debt. This is I'm creating legacy. And my goal right now, is to retire by 50. That is my goal. My goal is to retire by 50 years old. So I have 6 years. I have 6 years to be done. I want to be done with this stuff. I want to go do something else. I want to go have fun. I want to go travel, spend time with the family, go see the world and things like that with my wife. And so the payback amount here for the $7,000 is actually going to come back from my loan. So I'm going to pull the loan, pay back the $7,000, and I'm assuming that all of my expenses. So I'm doing this on purpose to say, hey, my expenses are $7,000 a month. So I'm going to pull the loan, pay back my $7,000 just for my expenses, and this number will adjust as I start paying interest and things like that, or start paying back the loan itself to keep this. So you can see how much I owe over time and how much interest I owe over time as well against the policy. Okay, so we don't, as you notice, there's a major discrepancy here between this $700,000 account with interest versus what I owe. And so I don't want to cause any problems. So here you can see I start repaying back my loans, right? I start repaying my loans with the interest and things like that I have. So I'm gonna start paying back that amount. So you can see that this is gonna start going down over time. See, less and less and less. So it's going to start going down to where at the end I should owe less. So here's how much I would owe at the age of 51, almost 52 years old. This is how much I would owe, but if I make payments over time, I would owe a little bit less. So I'll adjust this over time. This will get updated over time, and then we'll see how these numbers actually play out. So I think that's it for now. I think I've talked way too long. I apologize for it being so long, but I think this is very valuable information. If anything, you can see this could also grow astronomically as well, but so far I'm not liking the idea of having multiple, so we'll say multiple policies, right? So every year or every month or every so often, if I wanted to do another, I'd have to do another policy in order to add more money. Otherwise I'd mech my policy every single time. So this one's going to become a pain in the butt. I could easily see there being a new policy every single year, which is not feasible to me, because they also told me, oh, well, every policy that you have, you should have a separate checking account for each policy. I'm like, why? The things I see from this whole life IBC side does not make any sense to me whatsoever. Like, why do I need to have like a new policy and a new checking account for every single policy? It doesn't make sense to me. Why am I overcomplicating my life? It doesn't make sense. So, and the same thing, well, not so much the same thing. I haven't seen Donnell say, hey, every time you adjust your policy, we're going to create a new policy and you're going to have to open a new checking account. You see what I'm saying? You don't have to do any of that stuff with this one, right? So I'm going to go ahead and delete this stuff out. So this one, no new bank account so far. And with this one, they tell me, hey, you need to open a new checking. For each policy. I don't understand why. It doesn't make sense to me. This does not make sense to me. It's a pain in the butt to get started. There's too many people involved. They charge you $500, but it is easy to pull a loan. I don't like the fact that you have to open up multiple policies, and then I also don't like the fact that you have to open a new checking account for each policy. So every time I make an adjustment, say, hey, I want to start putting $500 or $5,000, I go, okay, well, you got to start a new policy. Like, Jesus. At least with this one, all I got to do is make a phone call. That's all I got to do is just make a phone call. Let's make a phone call. Hey, say, Donnell, when can I add more money to my account? Like, change this from $500 a month to like $5,000 a month. When can I change that? Oh, you'll have to wait until your anniversary date. Okay, so I'll wait for my anniversary date, see what I qualify for, because they're gonna do the whole health thing. Same thing here. Every time you open a new policy, you gotta do another health screening to do another policy. Health screening here, do another policy, and then I'll say, hey, on year 3, I want to go to $35,000. Can I go $35,000? Can I do it? Or 75? Say it's $75,000, whatever. Can I adjust it? What do I need? Okay, you need a health screening, health check. Can't spell today. Do a health check and screening, and then goes to underwriters, and they come back and say yes or no. And it's the same policy. I don't have to have additional policies. It's one policy. But yes, there's a problem with the whole theory that people say do not put all your eggs in one basket. Well, in this case, it's a life insurance policy. So I don't see a problem with you putting all your eggs in one policy or multiple policies. But you have to understand, this is like a glorified savings account. To me, it's like a glorified savings account, because savings accounts, you put money in and you can take money out. The difference between a savings account and whichever one you choose, whole life or an IUL, you can pull money out at certain points. So there's some restrictions. The difference between a checking account and a whole life policy, or a life policy, whichever. Whole life is the same thing. No matter which one you pick, it's a whole life policy. Your whole life. and IUL is the same thing in terms of fruit, right? We're talking about fruit. They're both fruit. It's a life insurance policy. It's a life insurance policy, a whole life insurance policy. The word whole life insurance over here just means it is not an IUL, right? You have restrictions to the policy, like I cannot go past this amount without making my policy. The other thing I did notice for sure is they do not show you. You will not find it anywhere. You will not see any of the costs. They will not show you. Let me say not shown here. Okay, not shown. In this one, you can see the costs, right? They have a whole sheet that's just costs, and it tells you your cost breakdown. And so far, I really like the expenses here. The expenses are super low, super duper low. Here, not so much, but I'm hoping that this will break to where it's like zero at some point, or just say maybe 25 bucks. Maybe 25 bucks here, and say that this is the lowest it'll ever go, 22.18. I want to see that. So in December 17th, I'll do another update. Hopefully it won't be as wordy as this one or as lengthy as this one, but I will post and show you the differences in here. So I need to find out what my surrender is. My surrender charges are for this guy, because it seems like there are no surrender charges. That's the benefit of this whole life policy, is there's no surrender charges. But with an IUL, there is a surrender charge, and each year it goes down to eventually zero. So I think it's like the 7th year or so, it'll end up being zero, and each year it does go down. But I think it'll go down even faster, because the value of the account I think it'll go down even faster, because this is my thought process. So in your first year, you're going to exceed the 3,000. I'm going to exceed the 3,000 surrender charge just in 6 months. In 6 months, I'll have $3,000, just shy of $4. I could put the $4 in, and bam! Now from then on, I can take out loans. Next year, they're going to say, hey, the surrender charge is $2,000. Well, I've already exceeded the $2,000, because by the end of the first year, I'm already at $6,000 in value, which is more than the $2,000, right? That's my thought process, but we'll find out. I will keep you guys posted to say, hey, it may be $2,500 the next year, but maybe it's a combination of 2,000 plus, $2,500 plus this. And if your account only has $6,000 in it, right, you're not going to be able to pull much out of a loan. So we'll find out. I'll find out how that works, and I'll keep you guys posted. I'll ask those questions too and say, hey, is this a new amount for that year? So if my account value is already at $6,000, does that mean that I can borrow the difference between $6,000 and $2,500? Whereas the year before that was the difference between $6,000 and $3,000 and $4. Like what is it, right? So that's the question. And I have a feeling it's the latter. What I'm trying to tell you is, if your account at the end of your second year is $6,000, you cannot take out 100% of that amount of money. You have a surrender charge first, and then you can pull that difference out until you probably get to like year 7, where you have zero, and then you have your whatever the accumulated value. Because I think at this time, at the end of that year, you'd have $12,000, right? If you had $6,000 every single year, you'd have a lot of money that you could pull out by year 7. So if you watched Donnell's video on how they did the reverse Uno, the reverse velocity banking, I think that's why he says that he wants the able character to only pull money after year 10, because then he has no surrender charges to worry about. Plus he gave his account enough time to earn interest and to grow, and give him enough time to deposit enough money to where he could take large chunks out of his investment, or I wouldn't call it investment, sorry. The correct terminology is take enough loan out of his cash value that he could then use to pay his expenses, pay his bills, and to live off of. All right, well, I should stop here. I'm not going to talk anymore. I hope that you guys have a great day. If you guys have any questions whatsoever, you can ask me anything you want, and I will find the answers one way or another. No matter who you're looking for answers from, I will find answers. If you want answers on whole life, or you want answers on MPI IUL, let me know, and I will ask those questions because I have access to that information. I can get those questions answered. I like to know things too. Maybe there's something I'm not thinking about. Maybe you guys can highlight those things to me as well. But leave a comment, do subscribe, and do share if anybody's interested in learning more about whole life and IUL. Thanks. Bye.